All right, what's going on, everybody? Today's video is for the true traders that want to understand how to look at the market and how to successfully trade this god-awful price action. Within this crazy price action are opportunities. And if you really look carefully and if you are patient enough, you will be able to reap the benefits of those opportunities properly. But you have to be extremely patient. You have to manage your risk, size your positions properly, understand when to get in and when to get out of a particular area of the market when it's just not favorable to you. Okay, all these things I'm going to cover in today's video. First, let's get some sponsorship stuff out of the way real quick. So Bitget is one of my sponsors for this video. I want to do this analysis because I started using Bitget after using FTX, Coinbase, and Binance for several years. I realized that I'm generating so much volume for these exchanges, but I'm not really getting anything back for me contributing my time, my money, my energy, and my volume. So Bitget has started an affiliate partnership with me where people who sign up with me under my link are able to reap the rewards for being early users, for them producing volume, generating activity or generating P&L on the exchange itself. So the affiliate link is in the description video below. It's also on the top right of your screen. And you can earn these rewards that Bitget is giving those who sign up for free, right? If you are able to fulfill all these different obligations that Bitget has, you will be able to make this $4,163, all this put together. In addition to that, there's also a 1 BTC giveaway campaign that they're running for the 100 lucky traders between July 9th and July 18th. Today being July 12th, we got about 6 more days left. I plan on making this 1 BTC as well as those who sign up with me. All right. So anyway, I just want to point these things out to y'all because there are opportunities out there to make money in this market where exchanges are really trying to get users to trade on their platform, right? If you're already trading somewhere, why not get paid? Why not get rewarded for trading somewhere else? Now, again, please do your own research, do your due diligence about Bitget. I created a video about Bitget on my YouTube channel. Y'all can look it up. I talk about why I'm using it, what some of their compliance that they've followed properly with registering with different countries and why I like that. And so why I use them for the last several weeks. Okay. But yeah, please make sure you do your own research. In addition, if you do want to sign up for a free newsletter, I write once a month in the Money Substack. That's the name of our newsletter, my Substack newsletter. And I talk about all kinds of different things. I talked about Stargate Finance, which is our last newsletter. It's regarding bridges. We talked about the NFT music industry. We talked about DGods, which is a NFT, NFT on Solana. I talked about Bitcoin and economic warfare, talked about One Harmony, 2022 predictions, Near Protocol, all kinds of interesting stuff. All right. So that's a free newsletter. And then I also have this Advantage membership where users can go in my private channel, my private Discord right here. They can access everything in my analysis, my videos, my trades, everything that I do from waking to sleeping moment regarding crypto. And all that is done when you do sign up for this Advantage membership for $97 per month. All right, let's get to the analysis because I got a lot of information to drop. So let's get started. All right. First things first, if you're struggling with this market, right? 2 years ago, I made this video. It's called the 10 Commandments, How to Trade for a Living. I've been a trader for almost 11 or 12 years now. And one thing I can tell y'all is that it's not easy, right? You have days and times and moments where you just want to quit, where you lose a lot of money, you blow up accounts, you mismanage risk, you do everything opposite of what you thought you were going to do for the day. This video will help you sort of map out these things. It won't help you solve the problems because that's your job to do, right? But it will help you map out how to guide your mind towards success in the trading atmosphere. And if you watch this video, take notes, right? Reach back out to me if you're having trouble still, and we can talk about it some more, okay? All right, so let's get started. price action over the last, maybe 24 or 48 hours has been just really shitty. You can kind of see it's just been completely just, destroying everyone for the past like several days. After we broke this uptrending structure right here, it's just relentless selling, right? Every time you get some sideways chop, you break down. Sideways chop right here, break down. Sideways chop right here, break down. Again, sideways chop right here, break down. This means that the sellers in the market are so aggressive that they just need to get out. They do not care what price they're selling at. They don't care contextually where they are in the market. They don't care how cheap Bitcoin is, how cheap they're selling it at or whatever. They just need to de-risk their portfolios and start getting out of their positions, okay? One thing you got to know is as you become more institutionalized as an asset class, you will have people who will shed these assets like Bitcoin and crypto, which are seen as highly speculative investment vehicles. They will shed these assets first on their portfolio books, okay? It's just how it is. You don't need to get offended by it. You don't need to even wonder why or how or whatever. That's just what they do, okay? Now, if you understand sort of the methodology of how these bigger operators, bigger funds, trade, you will then understand why they are de-risking heavily. And it is simply because the White House and the Fed basically are prepping the CPI data for tomorrow. Again, CPI data is the inflation data, consumer price index report that's coming out tomorrow morning. And it's supposed to be pretty bad, right? Inflation has been really bad in the United States as well as around the world. And it has caused the Fed to keep raising interest rates, basically keep quantitative tightening, and that has completely sort of annihilated stock market, crypto market to smithereens over the last 7 to 8 months. It doesn't really take a expert to understand that since this top right here happened, which is where the Fed started to remove liquidity, start to tighten and start to hike interest rates, the crypto markets have been just completely just getting annihilated, right? It doesn't matter what's going on. Everything just gets, destroyed. Over here, this is, more than likely probably going to break down, right? The point is that as we look at the current structure, what can we sort of ascertain? What can we glean out of where we are right now? Well, what we do know is that momentum is still down. We know that inflation data is getting worse and worse. However, there is something happening under the hood, which I find to be particularly interesting. If you're part of our community, I wrote up this update several weeks ago of how to contextually understand our market. And I wrote this up from the standpoint of if you're a bull or a bear in crypto or in stocks, this is what you need to see as signals, okay? We also did this video on our YouTube channel with two people who run a fund in Texas, a equities fund, and how they look at the market. So make sure you watch this video also on our YouTube channel. It's called Stock Market / Macro Update. Okay. So going back to this quick update, right? For bulls, what you want to see is you want to see two factors. Number one, you want to start seeing the dollar start topping. Okay. So if you want to see crypto start to go up, you want to start seeing the dollar start to break down. If I do a quick comparison of how BTC looks compared to the dollar, here's BTC, here's the dollar. I think it's abundantly clear exactly what's going on, which is as the dollar from this point onward start to push up, BTC start to break down. Why? Because the Fed is effectively saying that, hey, we're going to start removing money from the system. We're going to start turning off that easy mode, turning off that high liquidity environment, and it's going to get tougher in terms of conditions in the market where companies and even crypto that's not really making money, it's going to have a tough time. Excuse me, I had to sneeze there real quick. So they're going to have a tough time, and that's where you start seeing the implosion of crypto on the back of the dollar starting to trend up heavily. It is simply because almost everyone is starting to become cautious of a recession, cautious of inflation, and they're piling into the king of all things, the dollar. Okay, it's not Bitcoin, it's not Ethereum, it's not the euro, it's the dollar. Okay, someday that may change, but that day isn't today. All right, so as long as the dollar keeps trending up, we have to assume that Bitcoin and stocks are going to keep trending sideways or down. How much further can they go? That remains to be seen, right? But as of right now, the dollar keeps trending up and there's really no stopping it. The other factor is looking at US equities. As long as US equities start to see this breakdown pretty much in all sectors of the market, this is a growth stock, Microsoft is a big tech, Tesla is like tech slash auto. We have this is, what is this one? This is the financials ETF, right? So banks also trending down, healthcare ETF also trending down. So you can see everything in the stock market is getting whacked, just like crypto. So that should tell you that right now the market is actually somewhat of a simple trade, which is that as long as stocks keep going down, as the dollar keeps going up, you should expect Bitcoin to keep continuing down, right? The other aspect is looking at oil, okay? So oil is one of the main commodities that helps move goods across the world, okay? As long as oil also keeps trending up, meaning it's on this big uptrend, if it keeps trending up, it's going to keep inflation, at its highs, right? That's just how it is, because it takes oil to move goods around the country, around the world, to build goods, to build plastics, etc. So as long as oil stays elevated, those costs are passed on to the consumer. Okay, so the consumer is paying higher prices for some of these products, right? If, however, oil starts breaking down, if, however, the dollar starts breaking down, then we have an interesting shift in momentum. Then you want to start seeing, oh, wait a second, does the stock market start showing signs of a bottom? Does the stock market show that, okay, oil is starting to break down? Is the stock market starting to move more sideways like this, maybe starting to break up a little bit? Are certain sectors of the stock market starting to do better, such as semiconductors or even financials? That's what you want to be paying attention to. As of right now, signs are too early, okay? But those are the signs that you need to be paying attention to, right? That is what it takes to be a successful trader. You can't look at the wrong signs and expect the right results, right? You have to look at the right signs and expect results to a certain degree in a substantial amount of time that is as per whatever it takes for markets to react to that stuff, right? If the price and the markets do not react to such things, that means that either there's a lag and the markets are not pricing it in properly, or you might be right in your thought process and your thesis, and then you start going and being a contrarian in terms of the market, and you say, okay, it looks like oil is going down, the dollar is going down, but why aren't equities going up? Well, if you start buying equities, you start buying crypto, right? Yeah, you might be early to that trade, but hopefully that thesis plays out. Also, you have to recognize, when does your thesis prove you wrong, right? When we know that, so here's what I had, right? I actually thought that this thing would build out a little bit more and we would pop up maybe towards 23 or 24,000 up here. But I wasn't holding on to longs and I wasn't hell bent on holding this thing up forever, right? Once we start to see prices shift, meaning they broke 21.5, they broke 20.7 TSR, then they broke 20, then we said, clearly something is wrong, right? The market is clearly anticipating something bigger, something is happening that's incorrect. And right around this area right here is when this news dropped, regarding inflation tomorrow, that's going to be pretty bad. Okay, so these are the things that you want to be paying attention to, in terms of markets, which is like, okay, what are the signs you should be looking forward to? What's right, what's wrong about markets, what you should be having in terms of expectations. All right, cool. Okay, there's another important point that I want to mention, which I think CL actually covered, very amazingly, which is looking at open interest, total open interest, compared to the dominance of volume of the orange, which is altcoins, and blue and green, which is ETH and BTC. Whenever you see open interest of altcoins get significantly higher for an elevated period of time right here, as you can see with this orange arrows, you then start seeing the market start to roll over. Okay, this is the market rolling over back in November and December, as the altcoins were starting to overperform BTC and ETH. Again, back here, elevated periods of time where altcoins start to surpass BTC and ETH in open interest, market rolled over, right? So the point is that at present moment, we're seeing something similar, which happened in March and May, and we're seeing the unwind of that. However, now I'm going to add on to one thing that I don't think CL covered, which is that you have to be paying attention to dominance. Okay, BTC dominance is one of the most important things I think that we want to be watching in the current cycle. Because if we start to see dominance, say, I don't know, start pushing up too much against a dropping BTC price and dropping asset prices of altcoins, right? So if dominance is going up, BTC is dropping, alts are dropping at a higher percentage, I believe that that might start signaling a market bottom, okay? However, that market bottom is still dependent on DXY, oil prices, all things related to inflation, et cetera, right? As of right now, however, all these things are too early to tell. So what we want to see is, do we see a massive spike in volume in terms of dominance of volume of Bitcoin and ETH, specifically Bitcoin? And then do we see that dominance right here pop up? And at the same time, do we see, on a percentage basis, do we see BTC dropping, say, slightly less, and then altcoins dropping a significant amount and then bottoming out and then pushing up? That will probably be an indication of alts possibly leading the bottom, meaning they might be bottom before Bitcoin does. Okay, so that's one thing I'm kind of looking forward to, hopefully in the next coming weeks. As of right now, like I said, in the near term, things just look bad. Okay, all I can say is we broke major structure, up here. We broke inside 21.5, broke inside 20.7, broke inside 20. Now we're breaking inside the monthly open. We broke this ascending trend line. Like, what else is there to look forward to, right? I mean, from here, all I can expect is this low to be taken out. And then, some key, maybe multi-month levels. Like if we go to my monthly chart here, if we go here on a monthly basis, the next most important level is probably like, I don't know, 13.5 or $14,000, like this little cluster of activity that we broke up from but never retested. That's the next spot, right? Like, what else can I really say? We can keep saying every week or two that, oh, well, this has to be the bottom, or this has to be the bottom, or prices are, way too oversold, or the market's too oversold, or inflation has peaked, and all this stuff. And I kind of had a bit of a tweet storm on my Twitter feed right here, kind of just bantering with Avi Feldman. Again, this dude is probably much smarter than me, but I like to sort of challenge his ideas, because something that I think most people in crypto have is sort of so it's like a delusions of grandeur, or the inability to sort of see reality for what it is, which is that our market has been aggressively getting crushed by macro. And the fact that we're not realizing it, the fact that we're not correcting path, recognizing that there are many things wrong with crypto that we need to fix. The fact that we're not talking about those things means that we're not learning from our mistakes, right? We're effectively doing the same things that we did in 2017 and 18, which is create a massive bubble, the whole thing unwinds, and then we have to start rebuilding again. Now, obviously, there are significant things that are being built in crypto, which I cannot discount. There's a lot of great stuff in DeFi or NFTs. Rails are being built. I get it. But the point is that you still have a lot of stuff to fix. And so in my tweet storm, I talk about these things, and you also check it out, because who knows, maybe I'm wrong. Maybe you want to challenge me on some of this stuff, right? Maybe I'm missing certain things. So I talk about all these things, why people in crypto miss out on these major points of inflection of why we think we need to start thinking about the space differently. Okay. So anyway, yeah, I think that's pretty much about it. I talked about open interest and volume. I talked about things that CL said, plus, my little addition of recognizing, bottoms, recognizing the different metrics that you want to be looking for as a bull or as a bear, critical, levels of support that are being broken, like BTC 20,000, Ethereum 1,000, and Solana $30. Looks like all these are being challenged as we speak. Let me see here. Yeah, I mean, sort of order book wise and CVD wise, I'm not seeing huge liquidations right now. Obviously, you can make the argument that there's a lot of selling, a lot of shorts that are getting comfortable on the way down, but you can't really say shorts are getting comfortable or too comfortable when the price keeps validating that, it's going down, right? That means like there's actually some legitimate information that the shorts have, and the market is confirming it. So the market is actually validating the theory that yes, the market should go down, and that shorts are right, and that the sellers are more powerful than the buyers. That's just how it is. So I don't see a whole lot of long liquidations or short liquidations right now. So that means that the market might further apply more pressure to the downside until things start blowing up. Okay, things start blowing up in crypto. The spreads break, bid-ask spreads break. I don't know, maybe there's another insolvency, or I think yesterday there was a huge amount of like tokens from Celsius moving again. I think that's what we saw, right? I think this was this morning. You could see Celsius moved about 400,000 STETH, which is basically Ethereum, and they withdrew it. That's about $400 million that got withdrawn and put onto exchanges. Now, that could probably mean that it's about to start getting sold, right? And if that starts getting sold, again, you have to deal with more applied pressure to the markets, okay? So all these different factors create a lot of noise in crypto, create a lot of, nuance that you have to pay attention to. But like I said, right, look for the signs that are out there. If you don't have an edge in scalping this market, you don't know how to contain your risk, mitigate your risk, clamp down on your leverage, etc., just don't trade. I promise you, you're not going to be missing anything by missing out on these big down moves. Okay, just remember that in markets, majority of the time, right, most of the money is made on the way up. Okay, don't let anyone tell you that you have to be involved in the market now, or that you have to keep shorting. No. Okay, if you believe in this technology and you believe in its future, you know that the future is up, right? So you just got to be patient enough to recognize when the tide starts turning. Start doing your research, figure out what projects are out there, what's worth looking into or buying, or do your due diligence, and then start putting your money at work. Until then, sit tight, be patient, and then of course, watch my videos for good analysis if y'all like it. Okay. All right. That's it, everybody. That's all I got. Hit the thumbs up if you like this video. Again, check out Bitget. Link at the bottom, link at the top right. Join, and you get those free rewards from Bitget. All right. Cheers, everybody. Good luck, and talk soon.